Welcome to the Knakal News Network. Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm Carl Gaines, editor of the Mortgage Observer and Mortgage Observer Weekly. Welcome to the Knakal News Network. I'm here with Bob Knakal, chairman of Massey Knakal Realty Services, checking in on the financing market for commercial real estate. Bob, how are you?
Great, Carl. How you doing?
I'm good. So what conditions are borrowers facing now as far as lending and borrowing is concerned for commercial real estate?
Well, there's tremendous liquidity in the marketplace. What we've seen is that because of the spreads that are available to lenders today, it's a very profitable business. And we've seen market conditions such that new lenders have been coming into the market in fairly substantial numbers, and the market has become so competitive that rates are very, very low. And so if you're out looking for a mortgage today, you can get mortgages at historically low mortgage rates, notwithstanding the fact that the 10-year has been volatile recently.
Now, we can't talk about the finance market for commercial real estate without talking about interest rates. How are the movements in the 10-year treasury affecting the landscape right now?
Yeah, well, as you know, the 10-year is the metric that lenders look at more closely than anything else for commercial loans. And we've seen tremendous volatility there recently. I think what's happened is that the Fed has realized that they cannot continue this QE infinity policy that they've been on. They can't continue to spend $85 billion a month. So at some point they have to slow that down, and at some point they have to stop altogether.
What are you seeing as far as the regulatory environment is concerned? Any concern on the part of investors or borrowers? There's
a lot of regulatory things that we're not really sure how they're going to play out. Clearly, from a lending perspective, and something that affects the banks, is the Dodd-Frank regulation. It's still not really clear exactly how Dodd-Frank is going to impact things. Many banks I speak to say that Dodd-Frank has impacted their earnings per share by 20 to 25%, which really is remarkable. But on a regulatory front, what happens with Fannie and Freddie will impact the home market very significantly. And I think to the extent that parts of Dodd-Frank are rewritten or reinterpreted or start to become interpreted, it could have a very significant impact on the marketplace.
The CMBS market has been resurgent, but still not really enough to fill that gap in maturing loans. Any concern there? Or?
The CMBS market has been very interesting. You look at the CMBS market in 2007, for instance, the $230 billion of CMBS activity in the U.S. That dried up to, at a period in time from 2008 to 2009, there was a 12-month period where there was effectively zero issuance. And now that market is starting to make a comeback and was going strong. Many folks at the beginning of this year predicted that the CMBS market would be a $50 or $60 billion market. But what has happened is that with volatility in rates, it's had a little bit of a negative impact on the CMBS market, simply because you don't lock in your interest rate until closing with a CMBS loan. And as we've seen with the 10-year, tremendous volatility of 80 or 90 basis points within a 2-month period, you could end up closing on a loan at a rate substantially above what you anticipated when you started that application process. So I think that's actually created a tremendous advantage for the banks and the life companies that go out and will lock a rate in at application. In summary, the real estate lending environment is very profitable today. Competition is very significant among lenders in the marketplace, caused by many new entrants. Spreads are tightening, but not as much as you would think based upon fluctuations in the 10-year treasury. Banks and life companies have an advantage over CMBS lenders as they are able to lock in their rates at the point of application.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.